When we were picking ours, we said, well, do we want to be in the mountains or do we want the beach? We said beach. So we drove the beach. Then we said Panama City Beach. Well, we don't want to be too far from the beach. And so we started narrowing down the funnel of where I look. And so now we are saying it needs to be a first tier or a second tier property. First tier is beachfront. Second tier is 1 block from the beach. If it's not beachfront, it has to have a pool. And no matter what, the property has to have plenty of parking because that's a key at the beach.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor! 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 Doctor!
Now, here's your host, Dr. Alex Schloe.
Properties Podcast. I'm so excited for today. It is going to be a special topic. We're going to talk about investing as a couple. Dr. Michelle Downing is here and her husband, Patrick, and they have built a life in a portfolio that reflects exactly that, investing together in both marriage and real estate. Their story is proof that building wealth doesn't just grow your net worth, it can actually strengthen your relationship. Michelle's a practicing anesthesiologist, and Patrick is an attorney, but also a full-time real estate investor. He has his master's in civil engineering. So they make a fantastic pair. They own long-term rentals, short-term rentals, and a triple net commercial property. They've learned a lot along the way, and they're here to share their journey. So without any further ado, Michelle, Patrick, so awesome to have you on the show. Thanks for calling in from Panama City Beach while on vacation.
Well, thank you so much for having us. I've really enjoyed your podcast. We're thrilled to be here and share our story and hopefully inspire some other couples out there to build a life in marriage and real estate together.
Absolutely. That's what it's all about. I'm really excited to hear your guys' journey. Do you mind sharing a little bit about both your backgrounds and maybe how you met and how the first real estate first entered the picture for you?
Sure, we'd be happy to. So I'm Michelle Downing. I'm an anesthesiologist. Patrick and I were both born and raised in Alabama, and we met as young professionals practicing, me in medicine and him as an attorney. At that time, I'd kind of delved into the personal finance education because I realized that was something we did not get in our medical training. And when you hit that first job and start signing up for benefits and you don't know what you're doing, it's an uncomfortable position. So I started really delving into personal finance. As he and I got married, we learned more and more about the FIRE movement, or financial independence and retire early. And from there, I learned more about real estate. And so I'm here with basically my multi-talented superhero husband who has many different backgrounds and strengths that are different from mine. And he jumped in as the real estate professional. So he now does that full time. So in the spirit of your show, Alex, I'm the physician and he is the properties. So we're glad to be here this evening.
To give you a little background about myself, I worked as a civil engineer for a couple of years, and the recession hit. Nobody's building. I go back to law school. Practiced as a lawyer for 7 years, met Michelle, and then we kind of got into the properties. So it's building upon what my background is, legal and engineering, to invest in real estate. So, and that was huge to be able to use both my degrees at once. So,
Yep.
Yeah,
so
that's a rarity.
Yes, it is.
I'm one of the few attorneys that can do math.
That's awesome.
Yep. So now we now have a 4-year-old, a 2-year-old, and properties, and we build it together. And it's a lot of fun. We're just having a blast because we bring different viewpoints and interests and talents and skills. And so it's fun to build together.
Yeah, what a dream team with your guys' backgrounds. I was like, oh man, like you guys are a power couple for sure.
Well, I know there are many out there.
Yes.
Yeah. Yeah, well, hopefully some listening to this and some soon to be power couples as well that are inspired by this episode. So excited about that. Patrick, I wanted to ask you a question. So you moved from law and engineering into real estate full time. What drove that shift for you?
Well, I got out of suing people once I met Michelle. So I had to find something else to do. And real estate seemed like a natural progression for both my degrees, and I've always enjoyed real estate. I got I did my thesis in change orders at the University of Alabama, managed a few construction projects there, and then the recession hits after I'm working as an engineer and went into law, but I've always enjoyed the real estate aspects of the law. And so I saw an opportunity, we took it, we moved forward.
I think too, he had the skill set and the patience with me. He had to explain things like depreciation and bonus depreciation multiple times. Those just aren't concepts that we're exposed to in our medical training. And thanks to his patience with his other clients, he was patient with me and explained it over and over that a loss on paper does not mean a loss in your bank account. And so he just brought different skill sets to the table that were really propelled us forward.
Yeah, absolutely. I remember the first time my wife Steph saw our tax return after we did a cost segregation study on one of our short-term rentals, and you had that just massive paper loss, and she's like, "Oh my gosh, what's wrong?" And I'm like, "Oh, this is great.
Exactly.
This is awesome." But yeah, we'll definitely dive into that because you guys are in a really unique tax situation, both with short-term rentals and then real estate professional status. So we'll definitely make sure that we hit on that. But Michelle, I wanted to ask you, as a physician, how did you initially feel about diving into real estate alongside medicine? I know you mentioned you didn't get that finance education, which of course, I don't think really any of us really did in med school, but what was that like for you when you decided to jump into real estate?
I guess I was always raised with that concern that real estate is risky. And, that everyone has a story about someone who lost their shirt by investing in real estate. And so it was not in the cards, I thought, for me at all. So I really went more the Dave Ramsey style of trying to live below my means, invest, make sure I was getting my match at work. Again, we moved into sort of the FIRE movement. I followed the Physician on Fire podcast and blog, and we really tried to be very conscientious about our spending and our goals and making sure that we aligned those. And then when we stumbled upon a semi-retired MD and delved into their blog, this was before they had their courses and everything, but we started learning about the tax advantages and real estate professional status. And of course, being a full-time physician, that had never been in the cards for me. But now as a married couple with Patrick having this skill set, it seemed not only doable, but something he could excel at. And so we both got excited about the possibility and excited about the possibility of having a vacation home we could enjoy with our family and sort of start working on legacy and investing just with a different realm. So we didn't abandon any of the other skill sets we learned along the way. And we consider it like a balancing act that we're going to do both. So we're not going to quit living below our means or investing, but we're going to add this to balance things out.
Yeah, I think that's an amazing answer and a really cool journey, because I think that the FIRE movement and the principles there, and even, like Dave Ramsey's principles are so important when you're getting started on your investing journey, and like going from a resident making peanuts to then an attending, and all of a sudden you have this huge income jump and you're like, man, I don't know like what to do with all this. I'm going to buy a big house and a fancy car and a Rolex and all that stuff. And that lifestyle creep really happens. And then you get to a point where you're like, wow, I know I need to invest, but where did all my money go? And so I think it's really important to learn those financial principles and a bit about the FIRE movement and Dave Ramsey and how like, hey, how can I minimize that lifestyle creep so then I have that income to invest in income producing assets that then are going to be that are going to be protective and also give you that freedom down the road.
Yeah, I think resources like, of course, Rich Dad, Poor Dad and the cash flow quadrant, it just changed our mindset and our assessment about things where we're always asking, is this an asset or a liability? And it's okay if it's a liability and it's something we're going to enjoy with our family or give experiences for us or our children. We love to travel, but we just recognize it for what it is. And we try to make conscientious decisions that match with our goals.
Absolutely. That's great. Patrick, I feel like now is probably a pretty decent time to talk about the kind of tech strategy behind. I really do want to talk about your guys' journey and your real estate portfolio, but I think kind of the real estate professional status, the short-term rental loophole, some of the tax strategy and benefit that Michelle mentioned, being married to you for, one of the many great reasons, but I figured that would be helpful. So what's some of the strategy for folks who are listening? They're like, hey, I have a non-physician spouse who's interested in real estate. What are some tax strategies? And how could that help them?
Great question. So the easiest way to meet the real estate professional is that what you just mentioned, the short-term rental loophole. You buy a short-term rental, you spend more than 100 hours in that property, which means you're self-managing the property. One of the things when we were first starting out on this real estate journey, we're like, let's buy a beach property. We could never make the numbers work with a property manager because they're charging 25 to 30%. Doesn't work. But with technology we have today, we can self-manage those properties from afar. I self-manage from Birmingham, Alabama at the beach. So we're in Panama City Beach and Cape San Blas. I call my cleaners up. I don't have to worry about landlord tenant laws or anything because we don't accept anything more than 28 days. And so we have our team set up down here. They're on the phone. We come and visit our properties once a year and we see what we need to do at each property. But at the same time, I can handle everything via the phone, via my property management software. And I'm going to put a plug out there because this is really thanks to Avery and Luke Carl, where we learned this. Because originally we were like, we can't make this work. We're going to do long-term rentals. This doesn't make any sense. I met Luke and then we're like, we can make this work. So in 2021, we started with this and it's been really, really good. So we're self-managing all these properties from afar. And so now I've got even AI answering questions for me on the property management software. It makes it so much easier.
That is awesome.
Oh, the tax advantages. Well, the cost segregation studies, we just got the bonus depreciation back for this year, 100% bonus depreciation. You get to reduce on a short-term rental residential. It's I believe it's 39 and a half years is your straight term if you don't do a cost seg. If it's a single family residential, it's 27 and a half years. But you're going to be able to take that immediately against your W-2 income, even if you're only doing 100 hours in the property. You don't have to do more than, you don't have to do 750 or more than you would do in another job under IRS code, which is very, very important. You only have to do 100 hours. And you're the one doing the most in that property. And so by being able to do that, you're able to turn that passive income, which is rental income, and your passive depreciation, your interest cost, all the other costs there, and turn it against your W-2 income or your 1099 income or K-1 income and take that against your active income, which then reduces your AGI and puts you in from a 37% tax bracket down to a 30% tax bracket or a 20% tax bracket. And you can save so much money. It's like your spouse who goes from not working to making $150,000, $200,000 a year job because the income tax they would have paid on that is what they got back, what y'all got back in a tax return.
Yeah, absolutely. It is a massive benefit. And I think one that's often overlooked is the tax benefits. I feel like physicians are getting a lot more savvy to the short-term rental loophole and a lot of folks are learning that and it can be a really great strategy. But yeah, it is such a cool thing that you can do. And I wanted to hit a key point that Patrick mentioned. You don't have to have real estate professional status. This is separate from that. Real estate professional status, and I'm not an attorney, but real estate professional status, you have to have that be essentially your full-time job. So it'd be really hard for a physician who's working full-time or close to full-time to be able to say, hey, I'm a real estate professional. Now, I will say for me, for example, like now I'm working 2 to 3 days per week in medicine. And so now, and I'm doing that on purpose so I can get real estate professional status so that we can take advantage of some of these benefits as well from a tax perspective. And really, if you look at the tax savings that we'll have from that, like it's going to be pretty close to like working 5 days, which is crazy when you think about it that way. And so it can be another way to buy back some time and just really get that benefit. So this is different with the short-term rental loophole. So I just want folks to make sure they know that. But Patrick, you have your real estate professional status, correct?
Right. I'm managing not only our short terms, I'm managing our long terms. Well, not managing, but I'm managing the manager. I'm calling him, Michelle can tell you, I'm calling him maybe 4 or 5 days a week going, what's going on with this? Why are you charging this? I mean, he probably gets sick and tired of hearing from me, and then we have our triple net, which doesn't take much work, but it's a little bit of management. But overall, it's more than 750 hours. It's easily like probably 1,500 hours a year I'm putting into real estate. And that puts me in a different category. But with just doing a short-term rental loophole, it's an easy way if it's just you or if it's your spouse to get, and you have one property, because you're going to be answering messages on Airbnb, Verbo, through your property management software. You're going to be calling your handyman. You're going to be making sure the work got done. You're going to be, I was dealing with Starlink the other day on the beach, dealing with Starlink, but we got it done.
So our only caution would be to those looking to use the short-term rental loophole is to make sure you do it the right way and you document it thoroughly. We've already seen someone who reached out asking for advice because they were getting audited. And it was kind of clear from the conversation that they had not kept documentation along the way. And they were very nervous about the audit. And I was like, if you had done things the right way, documented the right way, if you do get audited, then you shouldn't have anything to worry about. You turn over that correct documentation that's accurate and detailed and time-stamped and with photos and emails and Google Calendars to prove it. I think there's a physician who's even made an app for a reps tracker. So there are ways out there for you to document it and just do it the right way. So don't be looking for a shortcut when you hear short-term rental loophole.
Right.
Yeah, that's great advice. And the other thing I would say while we're kind of hitting things to watch out for is don't just buy a property for these tax advantages. I think you still need to be strategic. And I know some physicians that got burned by like, let me just buy any short-term rental just because I need to reduce my tax liability. And then they're stuck in a short-term rental situation where it's not renting nearly as much as they thought, and it's costing them a significant amount of money, and they're just offsetting basically that tax benefit with having to pay their mortgage at a higher interest rate as things are now. And so make sure you're running the numbers, make sure you understand the deal. That's where getting a coach, like Patrick, which we'll talk about, or working with like Avery Carl and Luke and her team can be really important to make sure you're finding a property that not only is going to perform, but also is going to give you that benefit. The other thing I'd say is important too, and correct me if I'm wrong, is like, hey, figuring out, do you want to use this also as a lifestyle thing too, right? You guys mentioned how you vacation, you're on vacation right now. It can be a great way to also have a vacation home that maybe it's not cash flow positive the entire year or even at the end of the year, but you got to go visit it whenever you wanted and spend that time at the beach and get that other kind of return on investment, return on happiness with the property. Is that something that you guys have experienced with your properties as well?
I always tell people when you're buying, you're really going into a business. You're buying it to cash flow. So make sure, number one, it's going to cash flow. It's not an asset if it doesn't cash flow. You're going to want to go visit it once a year just to make sure everything's okay with the property, minimum. 2 weeks a year if you're doing a vacation home. That's a different set of scenarios on Fannie Mae and Freddie Mac, what you have to do. But make sure cash flow is number one. And then the depreciation, the cost seg, that's cherry on top. That is a separate category. Don't count on it, but it looks good when it comes back and it comes back to you. But number one, if it cash flows, it's a good property.
Yes, we definitely considered vacation rental as part of a lifestyle choice as well, as we enjoy coming to the beach. And so it's a great way to essentially have your guests pay for your vacation. And while we're here, like Patrick said, there's nothing like seeing it in person and using everything in the home where you can't find something you knew you had stocked in the kitchen. So we're constantly leaving lists out on the table, and we have my family come with me and we ask them to contribute and give us feedback. So we try to consistently improve to keep up our ratings and to keep it being a home that we enjoy coming to and that our guests will as well.
Yeah, it's a hospitality business for sure. And you guys mentioned some tools that you use, AI, for example, some other applications that are helpful for self-managing, because I'm sure people are listening to this and they're going, there's no way I can manage an Airbnb at the beach from afar and still be a physician. So what are some tips or tricks or tools that have been helpful for you to self-manage?
So I use OwnerRez as my property management software. There's a bunch of them out there, Hospitable and others. OwnerRez has all the bells and whistles. So we take a security deposit, they sign a rental agreement, they have damage protection insurance they're paying for. It connects to Airbnb and VRBO and a number of other channels via API. Then I have dynamic pricing software that connects to OwnerRez that pushes to those channels. And then I've got AI through HostBuddy. There's a bunch of different ones out there right now that has listened to, it scraped 6 months of what I've said. And then it goes, okay, well, this is the way he talks. Well, and it emulates me and outdoes me on most answers, but I have to check it sometimes too. And then sometimes it'll say, hey, we have a checklist. The guest is saying there's dirty blankets. We need to get that taken care of. So I call my cleaner, we get it taken care of. So it's been a tool that has decreased the amount of time I have to be in the property because it's emulating what I have to do. But at the same time, I have to stay on top of it as well.
That's awesome. Yeah, it sounds like, correct me if I'm wrong, totally possible to manage these short-term rentals within a reasonable time frame per week. Would you say that's correct?
I would probably say I spend 10 to 20 hours per week working on the short terms. Yeah. Depending on the week. The summers are much more busy than November through February.
Awesome. That's great. What about in terms of, investing together as a couple? What's that been like for you? What have you guys learned about communication, staying aligned, like figuring out, hey, is this an opportunity that we want to pursue? How's that been for you?
I'd say we're always a work in progress, but we really enjoy it. And I've heard Brandon Turner talk about he and his wife have to force themselves to talk about other things. And we're the same way. We just have so enjoyed this journey. And, Tony Robbins talks about one of the human needs is growth. And we get to grow together and we get to learn together. And so we listen to each other and we respect each other's opinions and feedback and analysis. And so sometimes I have to sleep on things, whereas he's just raring to go. Sometimes he has shiny object syndrome. So we just try to talk through it, but we're having so much fun together and building this together that I've found it a blast.
And I'd say one of the things is I've learned my strength is running numbers. I could say this property is going to cash flow, but Michelle takes it with another view. Well, this floor plan doesn't make sense. This needs to be done. This needs to be done. And that's stuff that me as a guy, I don't think about. And so I know my strengths and she knows her strengths. And so if her strengths say this is not a go, then we just nix the property. We basically move on because she's right 9 times out of 10, probably 10 times out of 10 on that. And then I'll just take it once we close on the property.
I think it's
There you go.
advantage that we both love like the math and sciences. So we both like data and we both like to try to analyze and try to mitigate risk as much as possible because we're trying to grow and to make a more secure future. We're not trying to do risky moves. But then I have enjoyed learning more about the softer hospitality side, like you said, the photography and the write-ups and the listings and making sure the communication is all very professional and thorough and clear. And so he is not offended when I give him feedback and I go in and I edit a photo caption or something. So I think that balance has been really nice.
My bullet point would be kitchen. Her bullet point is, this is a beautiful kitchen for blah, 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 blah. And I'm like, perfect.
Yeah, let's go with that. Yeah. That's awesome. Yeah, same thing here. Steph is amazing at all the design and everything. And she would for our short-term rental, she would, have this like design board, vision board thing and all this stuff on there. And it'd be separated by the room. And she'd be like, oh, this rug is going to be perfect. And she'd have a picture of the rug. And I'm like, oh, I don't know about that, And then, of course, it would look absolutely amazing. And I'm like, man, why did I ever doubt? But that's just not how my brain works. I can't just like see a room and immediately picture what that will look like, but hers does. And so it's just really fun to be able to do that. It's really fun to invest with your spouse and learn and grow, as you guys mentioned.
It's been an excellent outlet for me because, for instance, this house we're in right now was complete grandma with a lot of deferred maintenance when we bought it. And I could have a vision and Patrick is the execution guy. So I told him what I wanted, and here's our paint colors and light fixtures and countertops. And he is great with working with a contractor, and with his civil engineering background, he was able to say, we could move a sink here, or here's where the pipes go. And it's been like I said, it's just a fun team that I can be a visionary and he can be the integrator.
That's awesome. Yeah, dream team for sure. Well, what advice would you guys give to physician couples who are interested in investing, but they don't know where to start?
I guess the first thing I would do, I always recommend education. And so back when we started, Bigger Pockets was really taking off. And so the old podcast with Brandon Turner and David Green, I would go back and start at the very beginning and just listen all the way through. And I know Bigger Pockets used to have like a free ebook that you could download that I found so enlightening. Books like Rich Dad, Poor Dad, The Cash Flow Quadrant, all the books by Bigger Pockets about investing in real estate, long-term rental investing with low or no money down, Avery Carl's books about short-term rental, long-term wealth. And then she has a new book out, Smarter Short-Term Rentals. So there are all kinds of resources out there. I mentioned the blogs like Letty and Kenji's Semi-Retired MD. We just devoured their blog on a vacation and we're just firing off back and forth with ideas and brainstorming about how we could do that as a couple. So my biggest thing is education. Even going to your local library, ours in Birmingham, Alabama has a real estate section, and we checked out books and read as much as we could to try to learn and to mitigate risk as much as possible.
And then once you do the education, I'd say pick your market. That's, the market. Do you want to be in long terms? Do you want to be in short terms? Do you want to be in commercial? Whatever it is, pick your market. Once you pick your market, pick a location. There's the one thing you cannot change about property is location. So pick a great location, because you can change a lot of things about a property, but you can't change its location. And you kind of narrow down your funnel until you get to where you want to be.
And right
That's
now we
awesome.
kind of diversify. Our long-term rentals are in our greater Birmingham area, whereas our short-term rentals are in vacation markets. So we consider kind of a diversification, and you can pick a different asset class in each region that might work for you and your family.
Yeah, that's a great way to diversify and strategize. And I want to hit the portfolio and strategy here in a second, but I was thinking about when you mentioned devouring Letty and Kenji's blog, Semi-Retired MD. I found that I was on OP nights as an intern, and I remember it was 2 a.m, and I also was just reading through all of this, and I was like, man, this is amazing. And I'd already kind of hopped on the Bigger Pockets train and knew a bit about it, but something about seeing physicians who are doing it, who also had a family, and was like, this is awesome. This is possible. And I think that's a really important thing for people just, listening to this podcast or theirs or White Coat Investor. Doesn't matter, but getting in the room or getting around people or hearing people's story and journey and realizing this is what is possible. If I just put in some work and some effort and get educated, it makes all the difference.
And I think a podcast like yours has been so great to have physicians and people who invest in real estate and the different stories and ways to do it. There are many options, and folks can pick whatever fits best for their life.
Yeah, there is a million ways to make $1 million. Well, let's talk about portfolio and strategy. So you mentioned long-term rentals, short-term rentals, and we mentioned very briefly a triple net property as well. So can you kind of walk us through your portfolio and maybe led you to the strategy that you have and what you've learned from them? It's a big question.
So we started investing in 2019. I probably ran 15,000 calculations on properties. And we said, well, number one, we're going to start in Birmingham. We knew the market. We're going to do long-term rentals. And we said, we want to be in good school zones because that's what's going to appreciate, but at the same time, it's going to get good rent. We'll have good returns. So we found value add properties where there needed to be some rehab. We got the rehab done, the rent. So I'll walk you through one that's Michelle's favorite property because she found it as a foreclosure. We bought it for $36,000. It's in Leeds, Alabama. Leeds has a decent school system. It's probably a B- neighborhood. A little small, 2-1. Rents for $900 a month. Took $5,000 to rehab it. Wasn't in bad shape. Vinyl siding outside. So always when I'm looking for a long-term rental, I want something that's not going to have big CapEx issues outside. Had a metal roof, vinyl siding. The AC was shot. That's $3,000. No big deal. Inside was not too bad. And so we were able to get that, got it rented up, and then burned it out, got our money back out. So that one cash flows. It's a great property. And similar, we built up 13 properties in the Birmingham area in different areas of Birmingham that are good school systems. 2020, when COVID hit, I'm going to move over to the triple net. I found on LoopNet this industrial that was an 8 cap and is a sell lease back. And the company was basically a NASDAQ company, like a AAA rated company at an 8 cap, which means it was an absolute triple net, which means they pay the insurance, they pay the taxes, they do all the maintenance. We don't have to do anything. And I wrote the lease because I'm an attorney. So I wrote the lease and that's worked out great for us. And we got a great rate. And it's been, I think, like a 15%, 18% cash on cash right now. It goes up 2.5% every year on the rate every year also. So that's been great for us. Almost didn't close because we went under contract in March of 2020 and closed in May of 2020, which is the height of COVID. It was interesting.
It was a nail biter.
It was a nail biter.
I bet it was.
That was our first big project. So all the other ones, we were like, okay, buy this little property for $36,000, $80,000, no big deal. Now we're buying a property that's, 10 times the size of that, more than that. And we were like, can we do this? And now we're like, yeah, we can do this. And we've done it a couple times since then. So, and then we got into the short-term rentals when I met Luke Carl. Luke is a good buddy of mine now. I coach with him on STS Plus. He asked me to coach. We just had dinner with him the other night. He's a really good friend of mine. Avery's a really good friend of mine. And he got me onto the short-term rentals. And I feel like that has made the biggest difference for us because it's the best cash on cash if you can find a good property. Now you got to research it. And so that's where Michelle comes in. Got to find one that has the right floor plan, has the right location. Like I can say the location's okay, but she has certain things that she will not be okay with in a short-term rental.
Most recently, there was one across the street from a bar. And as a parent, when you're putting your children to bed, we're not going to have good reviews. So you can't change location. We'll find something else.
That's right.
So I am picky,
Yes.
but for a good cause.
But we've found 2 in Panama City Beach, and then we have 1 down in Cape San Blas. And we've just stayed on the market looking for good ones. And we found a couple good ones.
I think the biggest approach that we've had that is universal across our diversified portfolio is finding properties that are in distress or who have been on the market for a long time. And again, with Patrick's, he's not afraid to hire a contractor and to go in and try to make a plan for how to improve the properties. So we're able to get them at a discount, put in the work, put in the effort, put in the design and the furnishings. And so then we have a great property on the other end. And so that's been an approach that has worked well for us.
Yes.
That's great, too. And you're adding, of course, a ton of value with the renovations and furnishing it well. And what's your guys' plan long term? Are you thinking more, are you guys going to hold on to these short-term rentals long term, or what's the long-term game plan for growth and legacy for you guys as you're creating a life of purpose?
We don't like selling properties. We love keeping them and building on them. So if the right offer came about, though, I think we'd sell them, but it would take a heck of an offer.
Yeah, we've talked about the attractiveness of a 1031 exchange because we did create value by forced appreciation in some of these properties. And so if we did have an opportunity to move up into a newer, better, or bigger, we might take that opportunity. But overall, our original plan was to buy and hold, and that's what we've done so far. So we'll see. It's always a conversation. And again, we love growth. And so we'll keep looking for opportunities.
Speaking of growth, you guys mentioned that first property, $36,000, and then the triple net significantly more. What was that like as you were going from $36,000 to this larger investment in terms of growth? And what was that like for you? What were some thoughts you had? And then after that was done, how did you feel?
I think that at first it was very intimidating, and I felt a lot of pressure on myself being the one who was going to a W-2 job. That initially, if a $36,000 house did not work out, either we could resell it because it can be a primary residence to someone else, or I can work harder, longer, extra shifts, and I could pay that off or find some way to overcome that. And then when we got into a larger property, I was very nervous and saying, I can't handle this by myself with just W-2. So we did mitigate some risk by we do have partners on the triple net. So we're 50-50 partners. That's our only property that we do have a partnership on. And we asked more questions from experts. So we consulted with a broker who is in the commercial space, and he was able to tell us, well, if this company does leave, even though they've been there for over 20 years, if they did leave, it would take me about 6 months to find a new tenant for you who could use this space in this industrial area. And so we now have a 6-month fund that would cover us until we could find a new tenant. So we just tried to mitigate that risk by learning from others and asking more questions and creating a process for if or when that does happen, we're not caught by surprise. We've accounted for those possibilities because they are out there.
Mm-hmm. Yeah, that's great strategy for sure. And I felt the same way when I bought my first house. It cost me $58 out of pocket. And I remember being terrified about spending $58. And then now we just put an LOI in on a large assisted living facility, actually outside of New Orleans. And it's $8.5 million. And I'm like, holy cow, how did we get from $58 position loan, $189,000 house to this? And it's all about relationships and partnerships, strategic partnerships and education. And then you realize really work-wise, actually, this will probably be less work than some of our other assisted living properties. But it's just crazy to see that growth that happens over time. LOI hasn't been accepted yet, so we'll see what happens, and folks will have to stay tuned and see what happens. But it's just crazy. Yeah, thank you. Yeah, it's just crazy to see the growth that happens if you just keep putting forth that effort and networking and working with the right people and just focus on growing and learning.
Yeah, it is. When you heard Brandon Turner would say, oh, it's just an extra couple of zeros. And at the time, you're like, you're nuts. And then once you get in and you see the way that the deals can work and that the properties can perform, and you start to get experience and learn from others and try to build your network, then it does grow and it's wonderful.
Yep.
Yeah. Patrick, you mentioned you coached through the short-term shops STS Plus platform. What's that been like, coaching, working with them? And then what are maybe some insights that you might have in the short-term rental space or things that folks could learn from you?
Well, so it's been a lot of fun coaching. Number one, I enjoy helping people. They always have like similar questions. Normally it's about the photos. Their photos they need to either get new photos or they've got some of the worst hero photos out there. That's why their property is not getting booked. Sometimes their rates are too high. I also find that a lot of times, what sets us apart as an Airbnb is our amenities. And one of the first things, we have to put ourselves in the mind of a guest. Well, what is somebody looking for? Well, they want to bring Fido on the trip. Well, let's make ourselves pet friendly. They want to bring their kids. Well, we need to have a pack and play. We need to have baby gates. We need to have all that stuff at the property. And just small things like that, and small changes like that, then all of a sudden they're like, well, I got booked with just these couple changes, and all of a sudden they're extremely happy. So it's not big things with people. It's just little small things they didn't think of because they're thinking of how they would travel, not how the majority of people are trying to travel. Because when we travel, we don't take our puppies with us, but my gosh, it costs a lot to put them up with a baby at the vet or with a rover sitter or whoever. It costs a lot of money. And I understand why people want to travel with Fido and, everything. So we try to make sure we have all the amenities that people are looking for, number one. And so that's one of those things. Photos, if we also think, who's going to book? It's the wife that's booking. If you don't have the right photos, she ain't booking. So I hate to say that, but it's not the husband that's booking them normally. Sometimes it is, but 98% of the time it's the wife. So got to have good photos, got to have a good description, and then good reviews. And I always tell people, you just bought it this year. Year one, we're looking for reviews. Year two is when we're going to start really making the cash flow. Now, if you're already a super host, it's a different story, but we have to build the trust with our properties. So we have to really build the trust. That means answering questions, being super responsive. And so that's what I try to do. I try to be super responsive to my guests. I try to be very honest. I try to take care of things if there's an issue, even if it's like we have an elevator at one property, it's always an issue. Residential elevators are always a problem. They're not like commercial elevators. But we always try to take care of our guests. And just by answering questions and being responsive, guests are more happy because they think somebody's taking care of them.
Patrick has actually coached several physicians, and so he's been good because he does both the back of the house and the front of the house. So he's able to talk to them about LLCs, tech stack, and then all the way up to the listing and the details about interacting with guests. So I think he's enjoyed sharing that and meeting people from across the country virtually and helping them get started.
That's so cool. Yeah, thanks for doing what you do there, especially coaching other physicians. That's huge. And I think folks probably are listening like, oh man, how am I going to be really responsive? How am I going to answer the guest right away? Well, there's that tech stack that Michelle just mentioned. And there's some of the tools and tricks that we already talked about that can be really helpful where the guest perceives that it's you, messaging them back immediately, but it's AI, it's these other hosting platforms, and that can be really helpful as well. We self-manage all of ours. We were managing 3 at one time, and now we've whittled it down to just 1. We just sold our dome property in the mountains, and it hurts, but it was the right move at the time. And we were talking about that beforehand. But it wasn't that difficult, a few hours a week. And, we did have partners, so we kind of shared the load, but it was worth it. It was awesome. It was great to be able to use those properties, get the tax benefits, all those sorts of things. So I do think that there's certainly still a really fantastic place for short-term rentals. I guess I'd be remiss if I didn't mention what are maybe some of the things to look out for in the short-term rental space right now as the market's kind of shifted with interest rates as we see more and more homes going on these short-term rental platforms. What are some things to look out for?
Well, make sure you're buying in a place where you're not worried about city regulations is the number one thing. You want to be in a vacation market where they want Airbnbs and VRBOs at, because that's what makes the county money. If you're investing in Nashville for an Airbnb or New York City or one of these big cities, they're not looking to have more Airbnbs. They don't want them. They're regulating them out of existence, basically. So you want to be in the Smokies. You want to be in traditional or the beach. You want to be in some place like that where that's what's the norm.
And we also, Luke always says, buy a place where your wife wants to vacation. And so Patrick says the same things to folks. Where do you and your family like to go? And pick an area that you know well.
Yes.
And that you can at least go to and visit and find out all those details about the location to make sure it's a place that you want to attract guests to. So I think that's the biggest thing. And sometimes people get lured off the internet into top 10 lists. Avery Carl talks about this all the time. Make sure you aren't just picking off the internet. Make sure you go and you see how people vacation, because if you're a mile back from the beach, it may say a 10-minute drive, but you're not going to be booked. The beachfront's going to be booked first. So just really get to know the market well.
So when we were picking ours, we said, well, do we want to be in the mountains or do we want the beach? We said beach. So we drove the beach. Then we said Panama City Beach. Well, we don't want to be too far from the beach. And so we started narrowing down the funnel of where I look. And so now we are saying it needs to be a first tier or a second tier property. First tier is beachfront. Second tier is 1 block from the beach. If it's not beachfront, it has to have a pool. And no matter what, the property has to have plenty of parking, because that's a key at the beach. So that's how we narrowed it down. And it makes it, instead of searching 5,000 properties along Panama City Beach or Destin or wherever, I'm searching 30 properties. It really narrows it down what you're actually looking at.
That's huge. Yeah, it goes back to the funnel and just narrowing that funnel down and making it a little bit more simple. And I think another thing to think about, I'm a frugal person, and the initial thought is like, oh man, it's going to be more expensive to buy a house on the beach. Yeah, but it's going to be way more expensive to not have your house that's 5 or 6 blocks from the beach rented out. And so it's just, kind of thinking through that, making sure you're surrounding yourself with people who understand, hey, what does the market look like? What can I expect to cash flow with this property? What are the amenities I really need to look for is really, really important.
Yeah, I think discovering the market, and then the fancy influencer word of your avatar is, who are you catering to? Who do you want to come to your property? And set it up so that they will be attracted to it and want to be there. And then become educated. There are other mortgage products out there for vacation rentals that might be like a 10% down product or something like that. So if you really delve into either local banks or something like the Mortgage Shop, who offers these kind of DSCR loans or vacation loans, there are other options out there other than what folks think of as a traditional 20% down investment loan.
Yes.
Yeah, that's huge. Yeah, I think to Luke Carl's enemy method that he has when he's like, hey, look at all the listings for around there, see what they have, see how you can do better, look at their pricing, look at their occupancy. There's a lot of information that you can gather from that. We still use that for assisted living. We do the same thing. It kind of enemy method, looking around. Oh, hey, grandma in quotations is looking for a place to get a room here at this assisted living and get more information that way. And so the same thing can be helpful. And it's kind of crazy how different things can translate amongst different asset classes. And so if you're, it's just an awesome opportunity. Well, I want to get close to wrapping things up for you guys. I know you're on vacation and be respectful of your time. I know that you both, this isn't just about building wealth. It's about growing as a couple. It's about creating a life of purpose. It's about legacy. What's the vision that you guys are building towards in the future?
That's a good question. We're still working on that. I think we do have sort of a dreamy vision of me backing down some on clinical work and traveling more. We'd like to give our children experiences that might include like international or even slow vacationing, where you move through and experience cultures. We love to travel. We haven't done it much with small children recently, but we'd love to create a life that can be mobile or can at least be flexible. And so we're working through that, hopefully in the next few years.
That, and also teaching our kids, once they get a little bit older, how to read a profit and loss sheet, something you do not see in high school. or college. First time I saw it was when I was managing my law firm. So, real world applications of business, running a business. I think that's very important. So, but definitely the number one goal is getting her back down so that we can just enjoy life more.
That's great. Yeah. Get some freedom, practice medicine how you want to. I love that. Yeah. And it's so cool for our kids to be able to be in that environment and see like, hey, like mom and dad bought this house and they put in this work and now this house is worth more money and it's making them money and we can go do this traveling because of that. And it's really cool. Our son's 4.5, our oldest, and he's just like starting to put pieces together. Like I'll be like on a call with my business partners and be like, yeah, we're, looking at buying another house. And he's like, wait, what? You can do that? Like I thought we could only have one house. And so it's just really cool as he's trying to figure it out in his 4-year-old brain, what that looks like. And so it's really exciting. If you guys have any tips or tricks going forward in terms of how to better expose kids to business and different things you're learning, always interested to learn and go from there.
We'll have to learn off of each other because
Yes.
we're right behind you in terms of our ages. So we're going to be doing the same thing. I know you've talked about having like the investing and the saving and then the spend categories. And so we're just getting on the cusp of being able to start to introduce those concepts and let them see the work that we put into properties and see the process and try to give them feedback too. If Patrick is on his phone, he'll say, well, I'm talking to a guest at the beach house. And they'll say, the pink house? Yes, the pink house. So we're just starting to try to let them see that work can look in different ways and be in different forms.
Absolutely. I love that. That is awesome. Well, before we wrap things up, what are some ways folks can reach out to you, connect with you, learn from you?
Well, you can reach me at patrick@sunsetdreamescapes.com. Always happy to try to help any investor out there get started. We got a lot of help. I mean, from our CPA to our banker to everybody, it's been a team effort. It's always a team effort. So reach out, talk to anybody you can. I'm always happy to try and help somebody that's trying to get started because pay it forward, right? So, that's the key. And it may be somebody that we can potentially partner with in the future too. So any way I can help, please just reach out. You can reach me there. It's the easiest way. I'm very responsive. Michelle would say I'm always on my phone. So
I'm in a lot of the real estate Facebook groups, but yeah, our website for our short terms is sunsetdreamescapes.com, and Patrick has his email listed there. So he is very responsive by digital format.
Sounds good. Patrick, is that also where they can reach out to you potentially to do the coaching through the short-term shop, or is there another way to?
Well, I think it's Coach Patrick at stsplus.com, but they can always, yes, Coach Patrick at stsplus.com. I only coach 2 hours a week. It's a favor to my buddy Luke, who's a good friend of mine. I try to help people there too, but if you have any questions or anything, Patrick at Sunset Dreamscapes or Coach Patrick at stsplus.com. And I'm happy to try to help you, send you in the right direction, or, if you need a spreadsheet or something that I can share to you, I'm happy to do that too.
Awesome. Love it. Well, thank you guys so much for this episode. I learned a ton. I know folks listening to this learn a ton, and it's super inspirational to see you guys crushing it. Excited to see where the journey continues to take you all and to have you back on the podcast here soon. So without any further ado, we'll go ahead and wrap things up. But this has been Dr. Michelle Downing, Patrick, and Alex on the Physicians and Properties podcast. Signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only. It should not be considered financial or medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.